So this slide here starts off looking at different aspects of the economy and how it's doing from a positive to negative perspective. And so first we see the monetary policy, which is in the gray or neutral territory, because we've seen hotter than expected inflation going into this year. This is tempered what the Federal Reserve has been doing with interest rates and continuing to have a higher or a longer pause than expected for interest rates. Next, we see manufacturing, which this had been in the red territory and moved into the gray territory. As we've seen in March, a first time the manufacturing index hit positive territory after nearly a year and a half of being in the negative territory. So this is definitely a positive part of the economy. Next, we see the consumer, which overall has been fairly strong as people have had income coming in and then going and spending their income. However, we have seen this come down slightly as the consumer is starting to struggle a little bit more as we've seen an increase in delinquency rates, and also consumer confidence remains below average. Next, we have the housing sector, which has struggled a bit for a while as there's a limited amount of housing supply, as well as higher mortgage rates makes it harder for people looking to buy houses now. And then lastly, we have the labor market, which has continued to be strong as there's plentiful amount of jobs, and job openings, while they've come down a bit, are still higher than the amount of people who don't have jobs, and unemployment has remained near historically low records. So this slide here zooms in on CPI inflation. And so you can see here, inflation over the past several months has been bumpy. We saw initially inflation come down from over 9% to 3% as of June of 2023. However, over the past 9 months, inflation really hasn't made much headway and currently is at 3.5%, which is above the Fed's target of 2%. And it's definitely taking longer than expected to get inflation down to the target. Next, we see here delinquency rates have continued to rise. And so particularly credit card debt has, as credit card balances have increased and interest rates as well, it's making it a little bit harder for consumers to pay off those credit cards. And other loans as well have hit around pre-pandemic levels, whereas credit cards are above pre-pandemic levels when it comes to delinquency rates. However, the positive is it's not nearly to the level where it was during the great financial crisis in 2009. And lastly, we have a slide here on consumer sentiment. And so while the economic data that's been coming out over the past year has been positive, and it's definitely good to see growth, not all consumers feel that way about the economy, especially as consumers have struggled with higher inflation and prices over the past few years. We have seen an uptick in consumer sentiment over the past several months. However, it's still below average compared to where it historically has been.